Webinar. Okay. Hello, everyone. Welcome, welcome. My name is Siobhan Hall, and I am the Director of Operations for CoLab 18, and I am also a part of Riverside Center for Innovation. Today, we are partnering with Citizens Bank to bring you another workshop. This one is Business Fast Forward for Insurance. Super excited to have Mr. Kirk Wilson with Holman and James Insurance, and he is going to be telling you talking about all things insurance for small businesses to get you on the right track of what you need and what you may not need so that you can take your business to the next level. I will leave my information in the chat just in case you are interested in speaking with me or one of my colleagues. But just to give you a little bit of information, CoLab 18 is a community resource center located on the north side of Pittsburgh. And we are in the old Allegheny Center Mall, which is now Nova Place. And it is a free community center. You can come in and use the space for work on your business, to get some educational trainings, to do workforce if you're looking for a job. And we are not fully open 100%, but we do plan to open in June, and there'll be an announcement. So definitely look for that. But we're super excited to have you today and give you all the information around business. I will pass it over to my colleague, Emily, and she can introduce herself, and then we'll pass it to Judy and we'll continue to move forward. But welcome, everybody. I'm glad to have you here today.
Hi, everyone. Thanks for coming. My name is Emily Keebler. I am the Kiva Pittsburgh Program Director at at Riverside Center for Innovation here in Pittsburgh. And along with Siobhan and Judy, we kind of make up the financial empowerment team at the organization. So we're going to, the three of us will be kind of mixing it up and involved with our Business Fast Forward webinars over the next few weeks. So we hope you will join us for succession planning next week and saving and investing for retirement the week after that. And I will put the links for those two, in case you're not already registered, into our chat and pass it over to Judy McNeil.
Good evening, everyone. As they said, I'm Judy McNeil, Director of the Diversity Business Resource Center at Riverside Center for Innovation. Welcome. We, as they said, will be hosting this Fast Forward business series, and this is in honor of Small Business Month in collaboration with Citizens Bank. So we're glad to have you here. As Siobhan said, Kirk will be giving us great information about insurance and trends and coverage and so forth. I just asked that if you have any questions, to please put it in the Q&A section. That way we'll see it quicker and be able to address it. Please say your hellos in the chat. I think you're aware this is being recorded and it's also being streamed on Facebook. But I think our faces are the only ones that can be seen, correct?
Correct. And I forgot to mention the Q&A, but thank you, Judy.
Okay. And just to let you know, Jason Jones, he'll be joining us at some point, and he's with Citizens Bank, and he'll be talking to us probably at the end of the webinar. Okay, thank you.
Got my hand off, Judy?
Yes.
Wonderful. Excuse me. Well, hi, everybody. Good afternoon. Almost good evening. My name's Kirk, Holman and James Insurance. I work at RCI. I'm in that building, our offices. We are a third generation insurance company. And right now I work for the son, Jonathan. So some of you may have been in our office, might have met him. What's the quick key for full screen? You can see this, right? Where is it?
Yes, I can see it.
Yeah, but I was just trying to get the full screen and I can't remember what that quick key is.
What about up in the left-hand corner, 1, 2, 3, 4, the presentation button? Is that?
Yeah, but there's a way to make it go full screen. So all I got to do is tap space bar, and I can't remember what it is now, and I can't find it. So that's fine. We can see the slides, right? Perfect.
Yes.
So Holman and James Insurance, third generation insurance agent, independent agency. Very important, in my opinion, that you find somebody who's an independent agent. They have more access to different carriers, and they're not stuck with only one possible answer for your quandaries. So Mr. State Farm, Mr. Allstate, these captive agents are able to only help you with that particular carrier. So if you find somebody who's an independent like myself, we have access to a number of different outlets to help you. The objectives for the class here, I don't like to read every single slide, but it gives you an idea of what we're going to do for the different types that you're going to be required to have. And there are a number of, depending on your situations, we can always go into in-depth later, but we'll touch on just the basics tonight. And why is it so important for you? I'm sure most of you have a rough idea, but it is very important. 6 key areas here. Just different types is kind of the biggest thing, and what is going to be on your plate for next. So essentially everybody here starts with a general liability policy, right? What happens when I make a mistake? How is that covered? That's typically through your general liability policy. You start with that, and then you'll build things off. Other types like business auto and workers' compensation and all that stuff we'll get to. Why do we have to have these? Sometimes it's driven by your decision. You know, I want to feel covered. Other times it's contractually driven. What are these considerations for different types of policies? Your classification, what you do for a living, all these things come into play with how they rate you, charge you, and find you a place to put a policy. Agency agents, again, same thing. I'd always go to the independent guys. They tend to have a little more capabilities. And then once you do buy a policy, what's next, right? Logical stuff. Big thing for most of you will be state and local requirements. If you're doing a lot of government work, there's always going to be some sort of requirements that say insurance needs to be ABC. And if you get those requirements to whomever you're working with for insurance, it will go so much quicker. So please do. You know, hey, I need a policy for this, and here's what they're telling me I need. If you can have all that information ready, it will turn things over much quicker for you. But federal, state, local, they all have their say. The banks have their say. You have your say. I don't really have any say. I can tell you what you can do, but I don't tell you what you have to do. That's everybody else who's going to be dealing with you guys. Medical insurance, again, these are all just different kind of requirements. So when you talk workers' compensation, do you have employees? You're going to have that kind of a policy then. And then the auto insurance we'll dig into, because there can be, it's all situationally based. So please don't feel like there's a silver bullet that's going to fit all of you, because it won't. These are very tailor fitted. Policies should always be to the individual, and you should never waste your time comparing to really anybody else, because the thousands of factors go into these prices. So if they have 2 or 3 things different you do, the pricing is already completely different. It's all kinds of different types of policies like we touched on. So your professional license, business registration certifications, the GL, directors and officers for people like nonprofits and things like RCI, right? And different liability laws. So most of you are aware or have some sort of a channel to an outlet that, or should have some sort of a channel to an outlet that updates you on different new rules and regulations within your industry. So please be cognizant, you know, when things change, your policy might need to. Workers' comp, this is a very important. If you have employees, the state will require this, period, end. So very simple to figure out. It's a factor based on a rating, based on the classification for what they tell you are. So if you're a roofer or a contractor or a secretary, whatever it is, that's your classification. That's how they'll rate it. How much your payroll is the part-time labor and the full-time, and the number of employees, plus the money factor for that, what you pay in payroll, and that'll get you real close to what you should pay every year for workers' compensation. It's not a complicated policy, but it is most definitely required. So please pay attention. Big question with this is always, what about 1099 folk? I'm not a lawyer. I'm not going to tell you that it's okay to do that, because I don't know. But you're going to have to check and find out, because I know that a lot of people are. If it does allow you to not have them as an employee, and there's all kinds of things that you have laid out to cover yourself. You know, if you're going to say, well, they'll carry their own insurance, you better make sure they have it. And you better be getting listed on their policy as an additional interest. So that way, if they don't pay their bill, you're made aware of it. So be cognizant. Work comp is very important. Plenty of friends, plenty of friendships, family members, stuff like that, where it goes sideways because, hey, I hurt my knee doing something for you, and now I can't work. Are you going to pay my mortgage? Because if they don't, then there's a good chance they're going to be coming after them for work comp. Through no fault of their own, right? If you get unemployed, if you are continuously looking to do and try and find, there are different avenues for unemployment insurance. It's not something I do a lot of. I would rather see you get work comp first to start, and then we can move on to things like this. And they're always like that. Every policy has the meat and potatoes, and then you can add a couple sides. And depending on your job scale and what carrier you're with, there might only be 1 or 2 sides, and that's it. Or you could have 20 different options. But with stuff like this, it's more down the line. So look more for work comp and worry if you have employees first. And then unemployment insurance can come after. Different types of this. Now this is your property, right? So we've talked about your general liability. What happens when I make a mistake? How do something fix that? This would be more for, hey, I own a building, right? I'm not just a tenant. I actually own this building, and I am a fill in the blank that I do here every day for my job. Property insurance is very important, especially right now. I'm sure everybody here is aware of the cost of building materials. So nobody is going to be happy in the short term if this keeps going, because everybody's home costs a lot more to replace now. And insurance, whether it's your personal home or your business and the building that you do as a commercial structure, they all cost more. So if I say, hey, your policy costs $1,000, now that policy could be $1,200 to $1,400 a year because it costs $300,000 more to rebuild it based on today's cost of materials. So
Hey,
property is very important. Most people will have a loan, have a mortgage. They will require, the bank will require you to have some sort of a coverage to help offset that. Let's see here. I got a couple things going in the
Hey,
chat.
Kirk, we had a
Mm.
question here from Antoinette. She was inquiring about E&O insurance.
Yes. So errors and omissions, right? Errors and omissions is mostly for professionals, draftsmen, lawyers, doctors, insurance guys. If you are somebody who basically says like, I'm smart, I know what I'm doing, and then they don't, then you could like, here, I tell you, you've got coverage for that thing. And it comes back that, hey, I totally made an error, or I didn't know any better. I just told you you didn't have coverage because I didn't know that, hey, you did. That would be covered under my errors and omissions. Now, you would have to sue me, we'd have to go to court, you'd get to win, then it would pay out. But that is what errors and omissions is. It's an additional step for professionals that's not included in your general liability. It's always an extra for E&O. And that's why. For a home-based virtual assistant, if there's a classification exactly for that one, I don't know if there is, but that doesn't sound like a terrible idea, right? Because if you misplace a 1 or a 0 in an accounting form and that check goes out for $10,000 instead of $1,000, and now that's your fault. I don't know. I would just say what depends on what you're working with and how valuable they are. There's a lot of zeros in the number, I'd probably get a policy. If not, certainly down the road, keep an eye out. I think that was it, right? Is there one more? All right.
I think that was it.
All right. So I think we got all of the, okay, so here we go. Equipment, this is everything in your structure. If you have a storefront or a rental place or you own the building, you're going to have all your different equipment and all your different inventory. So whether that's the tools you use or stuff you sell, it's all the same. How much is it worth? How much of it do you have on hand? And can we put some sort of a coverage in place that says my building burns down? Yes, I got coverage for the building, but oh, by the way, I had $3,000 in inventory sitting there too. And I'm going to be shut down. So can I get some sort of, hey, because I'm closed, I can get some extra money out of that for loss of use? Yeah. So you see how quickly it just went from there's a fire at my building's covered. Well, what about the equipment in the building? What about all my stuff in inventory? What about how am I going to continue business if I can't continue business right now? So there's 4 coverages that just dominoed in an instant because of one fire in a building. That's how insurance can be really complicated really quick. So just a fun word of advice, if it is sudden and accidental, those 2 factors are met, there's a very good chance you'll have coverage in any homeowners or any insurance policy, because everything needs to be sudden and accidental for most coverages to kick in. Loss of income, like I was saying, loss of use is another term you'll see, but loss of income. I can't run my store, right? Something happens in the water main out front, I can't run my store because I need to have that to do everything I need to do, and I can't have clients in the business. How do I get help? A lot of scenarios where you have a loss, there is a trigger that will get you, as long as you have it in your policy, there will be some sort of a loss of income, loss of use that, hey, you weren't left, destitute because your bills are still happening. Everything is still happening. Life insurance, a big thing with life insurance, for those of you playing in the bigger leagues, you probably want to get a policy on each other. So if we have multiple partners, we do this on a pretty regular basis now, but multiple partners in a business, and they're all very valuable people, they will do like 3 people will have a policy on each other person. And that's for simple, I mean, some of you know how good and valuable your partners are. And if you were to lose them, could you all of a sudden supplement their 80-hour work week or whatever they're doing right now, where you guys are growing this business and working your tails off? And if the answer is no, that would be really hard. Then that's one reason to do something like this, because it would be so hard. You'd have to, I mean, you'd be buried, and you don't want to see the partner all of a sudden be gone. And then, hey, you can't run the business. And now the business suffers and is gone too. Disability and medical, they're very good. They're very important. They're also kind of pricey. So for the low level new stuff, yeah, it'd be great if you can get it and it's in the budget, please do. But realistically, that's a step or two away from most people who are starting off in a business, right? It's very important, but again, it's all just like onions, man, layers, layers, layers. And everybody right now with a new business is going to start with like a 1-layer onion, and that's it. It's not real big. And that's okay, because it's supposed to grow. It's supposed to happen like that. Liability, we went over, work comp, and business auto. Business auto is a big one because a lot of people don't realize how much they use their car for business. So the delineation is, if I just drive to my office, park my car, and that's it, that's a commute. If you use your car to go to appointments all day and you're driving the greater Pittsburgh or whatever area, that's a little more than. I would still argue for you, because you'd be my client and I want to help you. I'd still argue that there was a commute as long as you were only driving to that. Now, if you start towing stuff and hauling stuff, it can be different. But business auto is very important because a lot of people don't realize, if you have your friend or family member hop in their car and say, run down to the bank and get me some quarters because I'm working here, I can't do it, help me out. If they get in an accident, that could be a pretty hairy situation for you, because why were they going? Well, they were going to get me something. For what? For your business. Okay, so this is almost a business trip. It's that ridiculous sometimes, but you got to remember, carriers only want to cover exactly what is in their documents. When they say we will cover it with A, B, and C, and that's it. They say, well, what about C to D? Well, we don't cover that. You can pay extra, you can add it. But in a lot of those cases, they won't look to say, oh, how can we help you? They're going to go, we don't have to pay for a $40,000 claim. Great. Because they have that get out of jail free. So be cognizant of how you're using your auto. If you are using it all the time for business, look at a commercial auto policy. It's a completely different policy. The minute you take your car and start using it to make money, it's turned into a commercial exposure, and it needs to be written as such. Because again, the fear is that most insurance companies look for a reason to not pay. So if you say, oh man, I'm driving Uber, I'm doing deliveries in my car, we don't cover commercial risks, sir, ma'am. We don't have to pay this claim. And there's nothing you'll be able to do, but it's gonna be too late at that point. So very important to have a good talk. What exactly do you use it for? What's your radius? Is there anybody else ever using the car, or are you asking other people to use their cars? Kind of run through those questions with your agent, and that should really get you funneled to the right kind of, what should I even carry it? They're not terribly much more expensive, but if they're not really worth the paper they're printed on as a personal policy, then yeah, buy the business auto. A lot of this stuff is just determined through not that complicated conversations. You should be able to sit down and talk with your agent, and in a very short time have a good picture of, here's what I do, here's what I'm looking for, and he can tailor it to you, or she. It's more of those requirements that are placed by everybody else, the lender or investor. So pay attention that when you're signing up for these loans and looking at these contracts, what are the insurance requirements? Most agents, we can, without looking at them, pretty much write a quote that should meet it, but there are definitely times when we don't see something coming. You have a big contract that says we need a $5 million umbrella, which is very hard to justify for most small businesses, but we've seen it happen. It's like a coin flip. Like every once in a while, we can go ahead and get them to say, you're a small business, you don't need a $5 million. We get it. You're working with real big guys. And other times, that business pays a lot more for general liability and then pays for a $5 million umbrella to keep that contract. And that's just how it happens. Like I will go to bat for you and try and talk them off the ledge. Like, hey, this is a company that the entire worth of the company is $3 million. You're an $80 million company, and you're trying to explain to them why they need to carry an umbrella. Can we have some common sense? But that is a very small percentage that it works. So just be ready to say, hey, if those are the requirements, know what they are. And all this stuff comes down to the difference, right? Like things that might require you to have different policies. Cash flow is a real tough one. It would just make sure to have everything you have covered. And then the life insurance for the event of disability or death. Those scenarios, obviously, we're thinking more than one or two, but there can be a single owner who does get a policy on himself so he doesn't leave somebody else high and dry if he does pass, because there could be a lot of withstanding debt when that does happen. It's my only slide about bonds. Won't talk long because there's a bond class you should all attend, and they have good bond contacts who you should all reach out to, because insurance, like a lot of things, is kind of niche driven. So when guys like bonds guys find their niche and do well at it, go to them. You know, I'm a great sixth man. I'm kind of all around the place. I can do a smattering of many things, but I will certainly defer anytime I know, especially when Judy has, I've done a bunch of classes with I think there's two of them now, right? Because there used to be just the one, and now and they're good dudes and they know their stuff. So please, bonds are just a guarantee that you're going to do that job. And if you don't, here's money to offset that. There's a whole different process for them. It's not really insurance. It is, but it's not, kind of thing. So if you need it, you will know it. And again, use RCI for that funnel because they have some really good points of contact. Why, right? Why do we have insurance? So managing risks, risk assessment, risk management is a huge part for any small business owner. You are basically required to become a lot of things, your own accountant, your own legal team, your own, all this stuff. And this is no different with insurance. So just think about, you know, what am I doing? Where could there be opportunities for loss? You know, I hate to say think like worst case scenario, but that's how most of us are, you know, expect the worst, hope for the best kind of thing. That's how insurance agents are. You can do the same thing. Just think about how could everything go sideways if this fell bad right now. There you go. Now you're all of a sudden you're an insurance adjuster. The protection of these different assets and loss of income are always very important because, again, somebody passes away, something happens to the business, and there is no income. You don't want to lose it because of that. Because, hey, we just ran out of money and that's it. Now we're bankrupt. When there could have been some not too expensive coverage you threw in there that would have gotten you even a few bucks to help offset those losses. Protection from injuries, damage. I mean, this is pretty basic stuff when it comes to the world of insurance. You get that if you damage somebody's stuff or you hurt them, they hurt you, there's going to be some sort of a policy that could kick in. Question is, do you have it, right? Legal and regulatory, this goes back to the state laws and requirements they have. You know, retention for employees. If you have benefits, that will make people probably want to work there more than if you don't. Continuity, right? I'm sure there's some of you that have been in a business situation where things shut down for a little bit, and then when it did come back, it just never quite came back the way it should. So this is an important part of being able to recover quickly and keep moving, even when there are major disasters, system issues, all that kind of stuff. And then the protection from errors, that's more specifically for an E&O, but hey, anybody here who's not ever made a mistake, you go ahead and raise your hand. Well, who's that? I'll kick them right out right now. No, I'm just kidding. I can't see anybody but a couple. So if anybody did raise your hand, I'm just kidding. You're good. Home-based is only for those of you that have a really narrow and inexpensive field. So if you're like Etsy or you're something like that, $10,000 a year, maybe you make, that's it. That's where your home-based stuff stops being effective and won't cover you. I just had a baker put an oven, a $16,000 oven in her garage and turn it into a bakery. And it was a nightmare scenario because most homeowners look at that as a commercial exposure. You just turned your house into a bakery. We don't rate bakeries, we rate houses. So it was a very convoluted way to get there, but we finally got her a policy. So check up front, because I had the conversation with her. She was paying $500 for her general liability BOP. It's just general liability, that's it, $500 a year. Great deal. Bakers are low risk classes though. The minute she added in building coverage, personal property to cover that stove along with some other stuff. That policy now, it was a $800 homeowners and a $500 general liability. So $1,300 a year she was spending. Now it's a business auto, a general liability, a commercial property for the homeowners, because that's how we have to do it, and one more, and the total is almost $4,500 a year. But her business had exploded. She is making money, I don't want to say hand over fist, but she's doing real good. So when you start to grow, this stuff will increase. Yeah, homeowners doesn't cover much, so don't look for it, please. Tame. I mean, there's all kinds of reasons to have coverage for theft, but again, if you're a single person op, a lot of this stuff won't. And that's the question, how many of you just have, hey, I'm a consultant, I do one thing and it's just me all the time. A lot of this stuff won't apply to you because you don't have those same exposures. Greater coverage than retail, larger businesses. So commercial, it's funny, they always say like retail and commercial, you hear the terms thrown a lot. Don't get too wrapped around about it. The important thing is what's your classification based on your job. So do you fall under the roofer category? Well, I'm not a roofer, but I get up on roofs. Okay, well, there's a good chance they're going to jam you into the roofer box. Because if an insurance company doesn't have a pre-made receptacle for a shared individual job, then they try and find the closest thing they can. And if they can't find anything close, then they just tell you good luck with wherever you do end up for your insurance. So decide, just retail versus commercial. If the bigger you get, the bigger policies and all that good stuff should go. So it's a good thing when you start, if you're growing as a business, you should see higher premiums for that obvious reason. Because hey, I'm growing. That's how it works. Vendors, little kiosks, things like that. Festivals, conferences, plenty of people like that. It's not hard to do. If you're just a traveling individual who, hey, I take this and I go to all these different things, that's fine. Again, it'll come down to requirements. Does somebody say, hey, if you're coming to the fair this year to sell, we need their evidence of insurance. So just remember, evidence of insurance is a very easy thing to get. If you should always have a copy of your individual declaration pages. And if an individual or person says, hey, we want to be listed on your policy, it's no problem. It should just be a quick call to your agent. Heads up though, some companies will charge you $20 a pop to add. I'm going to go work down at Three Rivers. Well, Three Rivers says we need to see your policy. Great. Here's my policy with you listed. And they're going to say, we want to see this name and address. So have a name and address of whoever it is and send it to your agent. Some companies will have a single time fee. And if you only use that service once every so many times. So the example I have with most is it's $100 fee. And if you could do it once, it's $20. Real simple math there, right? If you do that more than 5 times a year, add the $100 endorsement that lets you do unlimited. Otherwise, pay $20 every pop, because all that is just, hey, we got to do a bunch more paperwork and that's it. That's all you're really paying for, is that little shuffle of paperwork. Most of the time, hold on a second. Hey, son. Yeah, not the time, buddy. Okay, go play upstairs. Thanks. Slinky's down the steps, folks. That's helpful. So does it make sense to, yeah, right? Does it make sense? Could you cover it without insurance? It's just called self-insuring. The term self-insuring means I am going to pay if anything goes wrong with this. So if you own your car outright, you can self-insure, but the state still requires you to have some sort of coverage. But if you buy your house and you pay that off, there's no requirement from the state that you have any sort of coverage. Businesses, your business front, same thing. If there's nobody driving you to forcibly say you are required to have this coverage, unfortunately, then there's a lot of times that you don't need it. A lot of guys in my position might not even bother to ask, but it should just be a real simple question. Do you do this? Yes, I do. Great. Let's have this conversation. So there are times when I have plenty of people self-insure because, hey, as a growing business, especially a starting, I don't have the capital up front. I would love to spend and protect everything I own, Kirk, like you're saying. Totally understandable. I get it. Budgets drive up most every decision we are all going to make here. Deductibles and coverage limits, they should be recommended to you. Most small business general liability policies, if you want to be taken seriously for any sort of a contract, should be a $1 million limit with a $2 million aggregate. So $1 million limit means no more than $1 million paid for any one claim. $2 million aggregate means no more than 2 claims a year, every renewable policy, period. So please don't have $1 million losses. They're not fun. It's a lot of legal usually involved. But deductibles when it comes to that, a lot of businesses, it comes down more to your business personal property or errors and omissions, but your general liability typically does not have, for most classifications, any sort of deductible. So it's not like your home and auto where there's always that case. So just remember, deductible is you telling the insurance company, I'm going to pay this out of pocket. And by doing that, whatever that amount is, you'll make them give you a lower or higher price. So lower deductible, you pay more. Higher deductible, you pay less throughout the year. But obviously then if it's a problem, here's a simple rule. If it's a problem to come up with 500 or 1,000 or 1,500 or whatever it is, then go the next step down and pay the increased monthly costs. Because if you won't be able to afford it, if there's a loss, what's the point in having the deductible? Is coverage sufficient? That should be a mixture of your agent and whatever requirements you have. Pretty easy to determine. If they say you need $300,000 liability and you hold up a $300,000 quote, you're pretty good there. But again, this should be tailored. None of us are insurance experts. I wouldn't tell you how to be legal because that's not my world. So talk to your agent. It should be very simple conversations. And any sort of time constraints and modifying coverage. Time with commercial is a bit of a hassle. When it comes to the personal lines, I have almost all the control with most carriers. I can jump in there, do everything I need to do, issue a policy, put in your payment, and we are done. A couple e-signatures later, that's it. Commercial, I have a carrier right now who is backlogged 36 days, I think they said. So if I submit a new business policy today, it might not get looked at for almost a month. So it happens, it stinks, but making sure you have everything right with the agent up front and having that good conversation should make that whole process go very smooth. Shouldn't be any sort of a real issue there. But time constraints, it's just a hard one because I'm at the whim of somebody else. And in a lot of cases, depending on how many policies you may need, I might be going to 3 or 4 different companies. Because unlike your home and auto, there are some companies and some jobs that, hey, we have a little bundle package and this is great for you. But the minute you get any sort of complicated or you do something that isn't the most normal thing in that job field, then there's a good chance that we're going to have 3 or 4, one company has the general liability, one writes the business auto, one writes the work comp, and one writes your life. And that's okay. So don't panic. The best thing to do in that scenario is to have, one agent who then handles those, because you don't care. You don't have to call carriers. That's what you have your agent for. Use them, please. Does the policy provide growth? Kind of a silly one, just because you can always add coverage. So endorsements are very easy to do anytime. If you needed more of something, the only thing that it comes down to is making sure if you're saying like, I need $10,000 coverage for this here tool, they might say, great, send us an appraisal, send us a receipt, give us some sort of documentation. So anytime you deal with the insurance companies, documentation is key. Always have that ready, a receipt or whatever else you can get to help them. After you purchase, right? What if you don't need financing anymore? Again, all this typically is removing a mortgage company or whoever has the loan and saying, okay, they don't get notified anymore. But in most scenarios, banks and people like that are just listed. So that way, if you don't pay that bill, they do get notified. So once it is paid off and you don't have to, the world's your oyster. You can fly without a net if you'd like. I would still recommend that if you own a building or have all this stuff, you just continue the coverage. You can certainly make a few tweaks, but it's not going to change your scenario and what you need for coverage. It's just going to change your capabilities and saying, I don't really want to pay for that. Credit. Lots and lots of companies look at credit, so hopefully you have good credit, because there are some that don't rate it as heavily, but there's a bunch that do. So when it comes to commercial stuff, having that in line will make a big difference. Cancellations, refunds, most of them have a prorated refund policy. So if you cancel it on, May 5th and everything you paid on May 6th after, you get back. But there are some companies and some policy types that have something called MP, so minimum premium. And what that means, if you see it on a quote, it means whatever that number is, that's how much we make, no less than. So if they say this quote costs $1,000, but it's $750 minimum premium earned. Well, if you have that policy for 1 day or 3/4 plus 1 day, they're going to make $750, and that's it. Can't fight it, can't argue. There's nothing you're going to be able to do about it. That's it. So just pay attention, ask your agent. Very simple question. Is there any minimum premium? Yes, there is. What is it? Great, it's this. Most of you shouldn't be planning that short term, so it shouldn't really be an issue. If you're going to buy a policy, you want an annual policy because it's usually cheapest with the best coverage, and just pay it and be done with it. And even if you have to make payments, that's fine, but just don't miss them. If you really want to call the state insurance department or the commissioner, every state has one. Every state's rules are different. They are all run through that department. So that's how we all decide. The great state of Pennsylvania says this, but then you go right next door to Ohio and it's completely different. So as fun as that can be, just make sure you do talk if you operate in multiple states, because that does change the exposure and the way and the capability of companies to write, because companies have to write in a state to offer everything. Like, they want to be domiciled in Ohio if this is an Ohio-based company. I have to be licensed to write in the state of Ohio. So everything kind of has to match up. Everybody's going to have risk. We all know it's there. Yes, sometimes when you are worried about watching your back, you might miss an opportunity. It's okay, because little did you know that by watching your back, you also saved yourself from 2 really bad things. Life is full of trade-offs. That's one of them. It eases, that's the whole point of this, right? Ease the risk, ease the burden. Because if something goes wrong in most of these cases, the scenario is you go to court for a very long time, it costs 6 figures of court case money. Whether you lose or win, you still have to defend yourself, and that's pricey. So focusing on this stuff up front could save you an awful lot of heartache on the back end and let you go focus on your business growth instead of everything else. Important things, right? Check the laws, check the local requirements. The legal side stuff is good, but it's also, remember the contracts, because they could put stuff in there that says you need to do this. Unemployment, work comp, it just makes you a reputable employer. Hey, I like working for this because we have those benefits. It gives people peace of mind. So again, probably not the first step for a lot of you, but it will be a necessary step at one point or another. Professional licensing, again, bonds, but yeah, some bonds do require that you have some sort of 3 letters after your name that prove you're somebody who was trained in that field and capable of doing it. So be ready, be aware that if you're looking at bonds, you might need to, hey, do I need to have any of those letters after my name, any sort of certifications. And then again, we've talked about the lenders and the investors, the banks and everybody else who want some form of protection. So whether that's an insurance policy, a life insurance policy, whatever kind of protection makes them feel better. Key points, right? Minimize the impact. So whenever something does happen, I mean, you don't have to necessarily start doing anything crazy, but like if there's a leak, put a bucket down, wipe up what you can see, get to it and take care of whatever the loss is as much as you can, and then, get to it with the insurance company. But minimizing it right away will have a huge impact on everything else, whether it's an actual loss or, work comp loss. Continued financing. If you cannot pay your insurance bill, there are companies out there that allow you to do premium finance. It is another process that you get approved for. It's kind of like a little mini loan on whatever the amount of your policy is. Go through that, you have good credit, you get approved, you got financing. Some carriers say we want it all, period, end right now. And if you can't come up with the $1,300, then that might be an option to do. It's not free, so it does cost a little bit more. Retaining employees, providing protections. We kind of touched on this a number of times, and then all your different things you have that make up your business. Is that a house? Is that a business building? Is that a car? Is that what kind of tools? All those wonderful things that we would look at for possible insurance. Evaluating risk. A lot of this just says make sure that you don't stick with Mr. State Farm, who that's all he knows is to offer you one thing. Nothing wrong with it, but would you want yourself limited to somebody who has lots of access to multiple carriers or do you want to make 10 different phone calls to 10 different guys? Records, very important. Quite honestly, if you keep your deck pages, every year when you get that new policy, you can throw out all the old paperwork except the deck pages, because those are going to update the policy. That's really all you need. If you had one file in your office with just deck pages of any policies you have, that's more than enough. Same thing, I mean, emergency contacts, pretty self-explanatory, beneficiaries and all that. We do that in life policies and things like that, but most of this is just saying have your ducks in a row. So if you aren't there one day, what's your plan, right? Pretty simple. I don't know if I missed a lot of questions or what you guys learned, but I'm sure you'd like to tell me. I'm okay with hearing that.
No questions
Oh,
that
no.
came in, no additional questions.
I think this is all, and that's, yes, we all know it's important. I've been telling you it's important for 30 minutes now, and that there's lots of differences in varying types. So, hey, that's me. Thank you, everybody. I'll take any questions if anybody did want a chance to ask or didn't want to interrupt during. Get out of the share screen. I do.
We didn't have any other questions come up that I saw, Kirk, but I actually have a question. And I guess, and I don't know if this is something you can elaborate on, like with trends in insurance, like, with COVID coming in and things like that, are there different things going on or offered, or, how has that affected, the industry?
Not much, quite honestly. I mean, the hard part about COVID is just the fact that a lot of people unfortunately just lost their businesses. So I had more cancellations for things
Wow.
than anything else. Now, a lot of them did as much as they could when it comes to, hey, I will give you a break. We'll give you, let me go here. We'll do some sort of a, take so much this month, like they'll actually help the financing. It was kind of crazy to see what as many companies that were willing to do. So it was nice because guess what? We want that to happen, right? We want people to be helped by their carriers. That's how it's supposed to work. And they don't want to have to go through cancel policy and have all that. So COVID, there's not like a COVID specific thing you buy. Got to remember with insurance that if you had all this wonderful coverage, that'd be great, right? But the problem is if they start covering so much, we wouldn't want to see what those policies would cost because they'd be insane. The same reason why your homeowners, people get mad about auto coverage, stuff like that. That's it. There's a limit to what they can cover because anything else, and it would really put them out of business because the payouts would be too much. It's not what the policy's rated.
We also had another question. Someone was inquiring about like business car insurance. I guess that's commercial. How does that work? Or you want to?
Commercial auto is the same as personal auto. It's maybe a tad more expensive, but if you have a certain vehicle type, you will be required. If you got dump trucks, you'll be required to get commercial. They won't even pretend like they're going to put it on a personal. My baker had a Ford Transit, those wonderful little vehicles. And it only took about 2 months for my underwriter to catch on and was like, hey, why does she have this? And she's a baker and she's probably doing more than just driving to and from the store. I was like, yeah. So the underwriter at that point said, hey, we want to see this on a business auto policy. I tried to help her as much as I could. She knew I did, but at the end of the day, that was the right way to do it. She grew it, like I said, in like 6 months, it took off. So that's what we hope for, because now she's talking about 3 other policies, extending the garage, like, cool. All the hard work's done now. How much was what? Oh, how much is business? Man, if you ever ask any insurance agent number or price and they get all sketchy, it's just because there are thousands of factors that you all have possible. So for me to throw any number out there, I don't know. Do you have a dump truck? Do you have a Ford pickup? Do you have a Ford Escort? Is it paid off and it's 15 years old, or is it a 2021 with all the new bells and whistles? So when you get into a fender bender, it costs $4 grand to fix. A lot of factors. Clean record, bad accidents. That the point, Richard, is I'd love to tell you, but I don't know because it comes to your classification, how many miles you're driving, what kind of packages are you carrying. I will tell you that I had a guy who did want to do that. He wanted to be just a delivery service, and the problem is with that is, what are you delivering? Well, I don't know. I just pick up a package and I take it. and I'm not FedEx, so I don't have x-rays that I'm looking at stuff to make sure nothing's ticking, going boom, illegal, anything. So when you think about from that aspect of, well, man, this guy had a big SUV and I want to say it was $4,500 a year. Now that's $1 million limit too. You got to remember, depending on what you're doing in a commercial side, I don't know what he's hauling. He could be hauling very expensive stuff, and he knows that for his contracts, he's got to look good. So in most cases, that's $1 million, $2 million aggregate at the very least. So, I mean, if you just say whatever your personal lines auto coverage costs, add 20%. And if that's good enough and that's in your budget, move forward. But if you're using that car constantly for business, just be careful. If you're not on a business policy, I have to be clear, tons of people do it. This isn't like, oh man, everybody's great, follows the rules. Oh no, ever almost. I get it. When you start, you got to cut a few corners. That's one of them. But when you can, if you are really using your vehicle that much, get a business auto policy. Because if that's the only car you got, cancel your personal lines policy. You're only going to pay for one policy either way, but don't pay for one that doesn't actually cover half of what you're doing. Might be a little more expensive, but it'll do what it's supposed to.
Okay, thank you, Kirk. I think we had another question come in to the Q&A.
Oh, okay. Yeah, my contact was at the very end there. Anytime, just give me a holler. I don't mind chatting about stuff ever. RCI are my peeps, so if you're in need of help from them, then use me, please.
We appreciate that, Kirk.
Yes, we do. Thank you so much. Thank you.
Thank you guys for the time. Have a great, lovely rest of your evening. I got to go take care of a Slinky.
Thank you so much, Kirk. Have a good day.
Thanks, guys. Take care.
We'll see you tomorrow.
Yay, 12 o'clock.
Okay. Okay, Jason. Hello there.
Hey guys, I want to thank you guys so much for attending. And I apologize for not being able to be available at the very beginning, but Jason Jones from Citizens Bank, and we have partnered with RCI to kind of put this on for you. One of the premises and thought processes were we wanted to do things that businesses typically don't think about or when they're starting. And so please share, if you felt like this was informational, please share this that tomorrow at noon. We'll be doing a very similar class. Again, much like Kirk, I'm very open. I love to chat about things. So feel free to reach out to me at Jason, JASON.S.Jones, Jones, at citizens with a Z, with an S, bank.com. And thank you guys so much for attending.
I think we put it in the chat, so.
We did, yeah, Emily did, yeah. Thank you, Jason.
Thank you.
Hopefully I got the right Z and S there, because when you said that, I was like, wait a minute. Do I know how to spell that word?
No, trust me, I've been in a meeting from 12:30 until now, so a meeting, so my brain's kind of fried at that point.
It was very informative, though. It was. It's stuff that you definitely don't think about. So I will definitely share it on our social medias again, and probably see if we can get a quick little blast out for people as well.
And those who join, we hope you'll come back next week, correct?
Yes, for succession planning. Absolutely.
Right.
Thank you all so much. I hope you have a wonderful night. Thank you again. And we will see you either tomorrow or next Wednesday.
Okay, thank you. Have a great evening.